Welcome back, ladies and gentlemen. What are the real closing costs when buying a house? Well, in this video, I'm going to break down what the closing costs are for my previous clients who purchased a house in Laveen, Arizona, which is a suburb of Phoenix, Arizona, for $325,000. Now, if you are in a different state or city, closing costs might be a little different, but this kind of gives you a ballpark figure of what your closing costs would be if you're thinking about buying a house here in the Valley of the Sun, Phoenix, Arizona, Laveen, any kind of suburb, at the purchase price of $325,000. Now, of course, it ranges on different price points, but you kind of get the rough figure of what your closing costs would be if you're purchasing a house for the range of, I would say, 300 to 325, 340. It's going to be really close to this ballpark. So with that being said, let's get right into this video. I am going to share my big tablet here with you. It's going to be a split screen, and we're going to get into the numbers. I'm going to explain what the closing cost would be for a $325,000 purchase. So let's get into that data right now.
This is where they go for the real estate info. I'm here to lead and help you succeed. One thing that you'll learn about me is I'm on a mission to get the knowledge to the world when making decisions and buying and selling real estate.
Victor Huerta.
Remember my name.
Gentlemen, welcome back. So as you can see, is we have the split screen going again. And as you can see here, this is the closing disclosure statements. Now, you as a buyer, you'll receive this in the beginning and really close to the end before you purchase your house. And this basically just gives you the math and the numbers so you won't be like shocked, right? Like, oh, I got to bring this much money in. So, this is going to be disclosed to you as a buyer. It has to be disclosed 3 days before you get your loan documents, so you're okay with that. It's before the close of escrow, so you can know what the math is. And not only that, is they give you a pre-estimated guess, and usually it's always lower. I've seen maybe one time it's higher, but it's usually lower. But this is pretty much what the closing disclosure is going to look like. And I'm going to go over the overall closing costs on what you'd be paying for a $325,000 purchase. Okay, $325,000 purchase. So my clients was about this house September 25th of 2020. You can see there that the sales price, when I look over here, I'm just making sure everything's in the screen so you guys can see what's going on. You see here the sales price was $325,000. Their loan amount was $315,250, and look at that rate. There's still some really good rates. 3.625% is the rate there. And let's go down and let's give you the total. So that's pretty much what my client's total monthly payment is, $1922.11. Okay, so let's get right into the closing disclosure and what the closing costs are. Now, let me just shrink this so you can see the math. There we go. Okay, cool. So your loan costs, okay, you're always going to have this loan cost right here. And the money that they had to pay to get this loan was $1,645. Let me bring this up. Okay, right there. That is their loan costs. That was their loan cost to actually get this loan to purchase this house. Okay, then you also have your appraisal fee, and that is it's $475 with my lender that I use, and that is actually paid before closing. So before you get your loan documents, before you sign on your house, you have to pay this, and this could be a form of a credit card, debit card, or cash, or check, whatever you want to do. It's just that you're going to pay for the appraisal, right? Because your appraisal has to match the purchase contract. Okay, so whatever you're paying, whatever's on the purchase contract that you and I negotiated with the selling agent and the seller, okay, and we came to an agreement, well, you have to order the appraisal, and that price on that purchase contract has to match the appraisal, or it could be above. If it comes in lower, then we're gonna have to negotiate that price, change some terms. It's kind of a mess when a property does not appraise, but we're not seen that many issues here in Phoenix, Arizona on appraisals. Okay, now let's get into your other closing costs, okay, the real closing costs here is right here. You will see your title services. Okay, these are all these are closing costs that you pay as a buyer to purchase a property, and this is for title fees. Okay, so the title is to take care of you and during the transaction, and the seller has title fees as well. So you have a closing protection letter for $25, an endorsement fee for $300, and then you have the actual escrow fee for $725, which is the escrow agent doing all the work. And the biggest cost is your lender's title insurance. Okay, your lender's title insurance, and let me bring this up, which is $1,662. Okay, you can see right here. I'm gonna blow this up. Okay, there you go. So that $1,662 is the big kahuna, which is your lender's title insurance policy. So this is going to protect the property or any deeds. So if anybody comes behind you and has a lien on the property, who's saying that that's my property, it wasn't supposed to be sold, this title insurance policy protects you from anybody claiming that the property is yours when you purchase the property. So during the transaction, the title company is making sure that nobody's coming forward and saying like, hey, this property is mine, it should not be sold. And you're just a lot of E&O, right? It's just a lot of insurance and just making sure that the title is clean, and it could be sold from the seller to the buyer. Okay, so that's your title fees, and you can see your title fees with just that is you see A, B, and C, your total closing costs from A, B, and C, which is your mortgage, right? Your loan officer, your appraisal, and then you have your title fees is right there is $4,982. Okay, so right there you already have $4,982 in real closing costs that you have to pay out of your pocket. Okay, now let's get into the other costs, as they call it, the other costs, right? So they got a recording and a deed and a mortgage that they actually got to send over to Maricopa County, and that's $60. Okay, because you always do the deed of trust and the mortgage they all have to be recorded right in Maricopa County, and of course Maricopa County has a separate fee, and Pinal County is a different county that has their fee as well. So it's $60. Now, homeowners insurance premium, okay, they're going to collect 12 months in advance. So depending on who's your homeowner insurance, so you can actually like for us, we have State Farm. So our car insurance is through State Farm. We have our property through State Farm as far as home insurance. We have some of our other properties with a different insurance company, which is cheaper. So sometimes you get a great deal if you bundle your insurance together. Sometimes you don't. So when you start buying a house and start going through this transaction, I advise you to call your insurance company and be like, hey, I'm purchasing a house at 123 Main Street. I need a quote for a homeowner's insurance. And sometimes they'll give you a discount if you bundle it up. So right here, 12 months is $570 for their homeowner's insurance. Okay, and then you have to do prepaid interest, which is 31.74 on this one per day. And if you notice, it's from 9/28 to 10/1 because they're purchasing the property. It's business days, so that's the reason why they're paying just those couple days, and that came out to $95.22. Okay, now you can see the homeowner's insurance right here is they got to pay for 3 months. So we close in September, so they got October, November, December, and it's $48.17 for the 3 months. So that totaled $144.51. So you just multiply it times the 3 months, okay? And then obviously you have your property taxes. So property taxes are paid in arrears. Just think about it as walking backwards. So they're paying for the 3 months. So the seller has paid all the way from January to September 25th. And then now my client is paying from September 25th moving forward. So now they're paying, so you just get the taxes, whatever the property is, divided by 12. You're taking over, so they're taking over for 3 months. So they have October, November, December, and that comes out to the 210.31, which is $630.93. Let me know below if this is making sense to you. Okay. Now, HOA is kind of a pain in the ass. Is some of this stuff can be negotiated. Okay, here are the HOA fees. You have a HOA capital contribution fee, regular HOA fee, prepaid assessment, transfer fee, and transfer fee. And it all depends on the property you're purchasing as far as HOA. You can see here is they have two HOAs. They have a Montana Vista HOA, which is actually where the subdivision is. And then they have a management group, Trestle Management Group. That's a big Trestle. Trestle Management Group is big here in Phoenix, Arizona. I see this on a lot of my transactions, and they just manage a lot of the paperwork. So capital contribution was $264. That means that you're putting money. It's kind of like a savings plan. You're putting it into this big pot in case the subdivision needs like new roads, the parks need to be cleaned, they need to plant new trees, fix the drip system, etc. So everybody in the community has this big pot. You just put the money for capital improvements, and they have to have a budget. Okay, you have to have like a median line budget in case for new roads or something breaks in that HOA in your community. Now, HOA fees is $75. That's for trestle management to manage the paperwork and everything like that. And then prepaid assessments, transfer fees is the same thing. A transfer fee is pretty much saying Victor is buying the property from Rob, so we have to transfer all the paperwork into his name, redo all the paperwork, mail it out to you, etc. So that's what they're doing, is they're doing the transfer. That's pretty much what it's called. It's called a transfer fee, and you'll notice that both HOAs have to do that. So your totals for closing costs on that is $2,095. So if you add up, you come back up here and you add up A, B, C, okay, E, F, G, and H, you get a total of $7,077.18. Okay, that is the total closing costs. Now, that does not include your down payment. So the program that you're using, it could be different, right? You could have FHA loan, which is 3.5%. You multiply that times the sale price. That is your down payment, okay? So that is your down payment. Your closing costs are separate. So this is a separate fee. Now, for closing costs, what we usually do is we try to negotiate with the price. It's hard right now in Phoenix, Arizona, because we're in a seller's market to negotiate it. So at $325,000, this price was listed pretty much max, because I called the listing agent like, hey, there's no room to go up here. So if we go up to help get some closing cost coverage, do you think it'll appraise? She was very honest and truthful. She's like, hey, I listed it as max as I could because of the upgrades. So we're looking for a buyer who can pay for their closing costs. Now, I did my research before showing the property, and I talked to my client. I said, hey, they're not going to give no closing costs. And I had to educate my buyers, especially my clients, and be like, hey, we're in a seller's market. You're going to need some cash for closing costs because this property is just pimped out. It had new wood floors, granite countertops. It was only 2 years old. I mean, it was a very, very nice property. And they were okay with it. They loved the property. Once we walked in, they fell in love. They were like, hey, we got to go after this one. And of course, had multiple offers. Our offer was the best. And so they had some money saved up, and it was okay for them to move forward because they paid for their closing costs and they paid for their down payment to get the house that they wanted. So just keep that in mind, that closing costs are separate from your down payments. And the total closing cost for this house was $7,077.18 for a $325,000 purchase. So now you can add, if you wanted to buy down the rate, your closing costs would be more, but they were okay with the interest rate. It's a very good rate at this time here in Phoenix, Arizona, and the rates, they go up and down. It just all depends on the day. They change daily. So I hope I made that clear as far as the video for closing costs, because I began a lot of questions like, hey, what's the closing cost here? My last video, I said it was probably about 2.25% of the sales price, which I think it's pretty accurate. It's pretty close. So if you wanted to know what the closing costs, are, let me get my phone out. Let's check real quick. So if we do 325 times 2.25%. Yep, look at that. $7,312.50. And this is $7,077.18. You can see there. So I did it 2.25%, which is 325,000 times 2.25% gives me this number. And it's really close to what their actual closing costs were. So my other video is pretty accurate. It's kind of good to see the high number like this. So you can actually see like, hey, you know, it's pretty right on. So, and then if you want to do your down payment, you could do the same. I'm trying to put my phone in my pocket. It interferes with the mics and everything, and I hope it's not going. So remember your down payment is separate than your closing costs, right? So if you want to figure out what your closing costs would be, and if you need to ask the seller for help, you kind of know the math and the figure, like, hey, we're going to have to ask the seller for like at least 2.25%. You can reduce it to 2.125%. Now, if you need all your closing costs, then you're going to have to increase your purchase price. But if you have some money, you can actually, you know, multiply it times 2.25% times the sale price to get the closing costs. And then you can negotiate like, hey, I got like $3,000 that I can pitch in. So we only need to fill the gap of the $4,000. Okay. Now your down payment is going to be the same thing. If you're using FHA, it is 3.5% times the sales price. You add those two up. That is the money, the total money you're going to need to buy that house. If you're using a 5% conventional program, multiply the sales price times 5%. That's your down payment. 10%. That's your down payment. 15%, that's your down payment. Okay, so just multiply the purchase, your sales price, what you're buying the house with 2.25%, gives you kind of a rough number of what your closing costs will be. So I hope that made it pretty clear of the closing costs. I should have switched the video earlier. I was just got too much stuff going on in my mind. But yeah, if you have any other questions, just leave a comment below. Most definitely, reminder, this is for Phoenix, Arizona. Okay, I'm a local agent here in Phoenix, Arizona, Victor Huerta. So you know what? If you have not done so, click that subscribe button. Help the channel out, man. Help the channel out. I got a lot of other people coming. I got 2 listings right now. I got 3 onboarding clients right now off of YouTube. And if you're looking for help, either buying, selling, or investing in some real estate, most definitely would love to help you out. We could break down on the whiteboard like this, see if you're ready to go, see if you're not ready to go. And to be honest, the market's still on fire here. I checked yesterday. We only had like 6,000 listings for sale. So an active, a neutral market here in Arizona is 30,000 listings. So we're not even close to a balanced market. Okay, still a hot seller's market. So if you're out there looking for a property and your contracts are not winning and you're not getting the house you want, you're just gonna have to be more patient and just go a little bit more stronger in your offer, and or maybe just hire a different agent. I mean, I don't know. My clients we're getting them into the houses, and it's just the prep work. That's all it is. It's the prep work and understanding and going through a Zoom meeting and breaking it down and seeing if you're ready. Some of my clients are not ready. I tell them like, hey, you're not ready to buy a house. I don't want to put you in that situation. So if you want to go with another agent that's going to put you in that situation, that's cool with me. But I just don't want to be liable for you getting, foreclosed on and not making your payments, having a short sale, ruining your credits, and then hating me for the rest of your life, and then coming back here and doing some negative comments on my YouTube channel, because that's not what I want. I want you to be smart like me. We started small with a small house and then turned that into an investment portfolio. And I'm helping a client right now who just purchased 2 years ago, young couple. They're refinancing their house. We broke down the cash flow, refinanced their house. We're getting that house rented, helping them do the renting side, and then we're going to go buy another house, and that is going to be their first rental investment home, but they are going to make some serious cash flow, and I'm so proud of them too. So yeah, that's what this channel is about, is you picking my brain. I'm giving you all the information, and I know I'm going on a tangent here, but yeah, most definitely reach out when you guys are ready. We'd like to sit down and just go through the whiteboard and get some action here. And that is the closing costs on a $325,000 house. It's very simple. It's not complicated. Numbers work. So remember, just multiply the purchase price of what you're buying the house for. If it's $425,000, $450,000, just multiply it times 2.25%. It gives you a pretty accurate number, as you can see from this video. So once again, Victor Huerta, local Phoenix agent here in Arizona. If you're in a different city or state, subscribe to the channel. I'm just bringing out some good content overall. It's probably the same in your market, but you never know. But anyways, guys, ladies and gentlemen, I appreciate you guys, and we'll see you on the next video. If you have any questions, email me at victor@freeagentproperties.com. Again, that email address is victor@freeagentproperties.com, where we release new videos each week on home buyer tips, home seller tips, the Phoenix housing market update, so you can be mindful when you're thinking about buying, selling, or investing in real estate. We will talk to you soon.